This podcast is sponsored by BuyBiz.io. Discover premium AI-driven online businesses for sale, perfect for standalone growth or seamless integration. Explore now at BuyBiz.io to kickstart your digital success.
Ways to assess growth potential. Key factors to spot winning businesses. Learn how to assess growth potential by evaluating market size, business model, competition, finances, and innovation for smart investing decisions. How to gauge growth potential like a pro. Hey, ever caught yourself wondering how some businesses just seem to keep growing and growing while others struggle to make progress? It's like there's some secret sauce, right? Well, there kind of is. At least when it comes to assessing whether a business or opportunity has real growth potential. Today, I want to chat with you about the simple yet powerful ways to figure out if something's got what it takes to expand and succeed. So, imagine you're looking at a new business opportunity or maybe considering investing in a startup. How do you even know if it's worth it? Here's a super handy breakdown of the main factors to check out when sizing up growth potential. 1. Understand the market size and demand. First off, size matters. No, not the physical size of the company, but the size of the market it's targeting. Is the market big enough to allow for significant growth? You want to look at total addressable market, TAM, the total revenue opportunity if the business captured 100% of the market. Serviceable available market, SAM, the portion of the TAM the business's products or services can actually reach. Serviceable obtainable market, SOM, the part of the SAM the business can realistically capture in the near future. Also, think about demand trends. Is the product or service becoming more popular, or is it fading? If demand is growing, that's usually a green flag. 2. Look at the business model and revenue streams. Next, the business model is key. A growth-friendly business typically has scalable revenue streams. What does that mean? Well, they don't rely on one-time sales alone, but instead have recurring revenue or multiple ways to make money. Subscription models, licensing, add-on services, or digital products are great examples. Also, check how easily the business can increase sales without a matching increase in costs. If profit margins improve as sales grow, that's a strong indicator of growth potential. 3. Evaluate competitive advantage and positioning. No one likes to swim in a sea of competitors, especially if they all do the same thing. So, does this business have something that sets it apart? Maybe it's a unique product, a patented technology, exclusive partnerships, or a killer brand reputation. Strong competitive advantages protect the business from being easily copied and help it capture more of the market over time. For example, a company that's the first mover in a niche or one that has built a loyal customer base can often capitalize on growth faster. 4. Check the team and execution capability. Behind every successful company is a capable team. Growth isn't just about ideas, it's about executing those ideas well. So, assess the leadership and the team's experience, skills, and track record. Are they adaptable? Have they successfully scaled businesses before? Sometimes, the right people can make all the difference in pushing the company through challenges and into new markets. 5. Study financial health and trends. Money talks, right? Look beyond just the current profitability. Study how revenue, cash flow, and expenses have changed over time. Consistent growth in revenue paired with controlled costs is a good sign. Also, consider how the business is funded. Is it overly reliant on debt, or does it have healthy capital reserves to support growth initiatives? Financial stability plays a big role in whether a business can expand without hitting a wall. 6. Assess technology and innovation. In today's world, tech innovation often drives growth. Does the business use technology to create efficiencies, better serve customers, or develop new products? Being ahead in innovation can open doors to new markets and keep the business relevant. And here's something interesting. Emerging trends like AI, automation, or data analytics can be game changers for business growth. Companies that embrace these tools early often have a leg up. Wrapping it up with a real-world tip. All right, putting it all together, assessing growth potential means looking at the big picture, the market, the business model, competition, team, finances, and innovation. And guess what? If you're interested in getting involved with businesses already on the growth path, Archieboy Holdings AI-based Businesses for Sale has some compelling options worth checking out. They've curated smart, future-facing businesses that tap into AI's power to scale faster. So, why not explore their listings? Visit http://www.buybiz.io listings to see what exciting opportunities are currently available. Whether you're an investor, entrepreneur, or just curious, you'll find some interesting businesses poised for growth. Explore our listings today. Discover how you can get involved with AI-driven businesses ready to take off and maybe find the perfect venture that fits your goals. Thanks for hanging out and getting a better grasp of how to assess growth potential. It really comes down to knowing where a business stands and where it could go next.